This is The Money Show. I'm Bruce Whitfield. Warren Ingram from Galileo Capital is with us. He is a financial advisor. I see Fiducia. This is quite interesting, Warren. Fiducia has just issued a statement this evening, the Federation of Unions of South Africa, saying they will enforce access to inspect the records, including available financial records of Steinhoff in terms of Section 26 of the Companies Act tomorrow. That's at the company's office in Stellenbosch. The trouble is the available records aren't right. For 2017, they don't exist. 16, they're being restated, and 15, they're being restated. One wonders the value of taking an action like that other than to get TV cameras rolling.
Well, I think that's exactly the point. You know, so we are being seen to do something with all those dues that our members are paying us, and let's go off and do something. You know, you were talking earlier about the horse bolting. That horse is bolted a long time ago. So whatever they find, what are they going to find, and what are they going to do about it once they found it? There's, you know, there are far more expert investigators going into this now than that union federation, and I think it's just grandstanding.
Yeah, look, that's politics. That's what it is. Now, Warren, tell me about Naspers, please. We've touched on this in the past, and Naspers remains a big and hairy company. It's trading today at about 3,600 Rand a share. And people really need to understand what the concern here is with Naspers. It's great if you own Naspers shares. It's great if you own the all-share index, and Naspers is a big component of that. Courtesy of Naspers, you start feeling very clever and a bit of an investing genius, because Naspers makes up a total of 20% of the entire value of the top 40 index. It's an astonishing heavy, what they call a weighting in an index.
Absolutely. You know, so one company, can swing an entire index on a day, just, if it has a decent day going up, or obviously can swing it down if it, something goes wrong and some, Chinese politician sneezes in the wrong direction and everyone thinks that, that's the end of Tencent. And so absolutely, it is a very big part of the index, and it's amazing to read and listen to sort of quite alarmist commentary from fund managers and my industry colleagues, saying, you could never invest in the top 40 index when it's only got, one share can make up 20%, and, it's primed for disaster. It's absolutely crazy. You can't do that at all. And I think there is some merit to that point. I mean, I certainly, if you gave me, 10,000 Rand of my own money to go and invest, I wouldn't go necessarily and put, 2,000 Rand out of that 10,000 into only one share and then spread all the rest of my money across a whole bunch of shares. I'd be a bit more diversified than that. But I just wanted to give a bit of context, to what actually goes on when one or two shares make up a huge part of the index and everyone tells you that it's absolutely crazy. This has happened lots of times in our past, and I think it's something not to get too fussed about, although, try and be reasonably sensible. So I just wanted to read you some names, Bruce. The Satrix Top 40 started in 2000, in the year 2000.
Is it that old? Sorry.
It's that old now. Yeah, it is. And the top 5 shares in that time was Anglo American was the biggest one, and that was 14% of the index. Richemont was 10% of the index. A little mining business that did some diamonds called De Beers was third. Anglo American Platinum. And then an IT company that was the absolute darling of the world called Dimension Data Holdings. That was your top 5 shares in the all-share index. Interesting to note that actually only if you just looked at the top 3, Anglo's, Richemont and De Beers, so 2 out of the 3 mining houses, and they would make up 37% of the index. Yeah. Now I can promise you that at that time I'm old enough to have been around at that time, investing it and looking at that people were saying, you simply cannot buy the top 40 index because 2 mining houses plus one international business that sells watches. That's just crazy. You can't have such a huge exposure to just those 3 companies.
And what was the index value at that time? Because that's going to tell this part of the story that needs to be told, I suspect.
Well, I actually can't remember what the index value was, but what I can tell you is
it couldn't have been much beyond 10,000. Frankly, the all-share index 15 years ago.
Well, the top 40, so that's Satrix top 40, from that time to now has delivered a return of just over 15% a year. And so, 15% a year doubles in value. So, I mean, yeah, I think you're I don't know, actually.
The market has probably more than tripled in value over that time.
Yeah. And so what happened in that time? Dimension data, shot the lights out and then absolutely collapsed. Anglo's shot the lights out and absolutely collapsed. De Beers disappeared into Anglo's. Richmond had quite a tough time. Anglo Platts definitely had an incredibly difficult time and then disappeared. So what's interesting about that is these when we buy an index in South Africa, we are generally going to be quite exposed to a few big companies and then spread across a range of others. So I wouldn't get too hung up on the fact that at the moment it's one or two big shares that are driving it. That's actually been the case since an investable index like the top 40 actually started, and we could actually all put money into it. And 15% a year is really not bad going for your money. So I think just to give it some context. But what I also wanted to do was then just look at what do you do if you are in there, and how do you protect yourself? And one of the things to look at is then how would the average investor typically, what would their exposure be to something like a Naspers? And for me, an average investor most likely would be putting money into a balanced unit trust. That's certainly the biggest category of unit trusts in the country, and your exposure there would be somewhere around 5 or 6% or 7% at a peak. So again, the sort of the kind of people that are trying to sow panic about massive exposure just to one share, well, you can go and look at your unit trust fact sheet and see what you've got there, but the likelihood is it's going to be around about 5 or 7%. It's a big issue. If it halves, it's going to hurt you a bit, but it's not going to collapse your wealth. And if it shoots up, it continues to go up, and none of us have a clue, I think, about what it's going to do in the next few days. Forget about the next few years. Then yes, it will add to your growth, and it'll be amazing to see other businesses that will start to dominate the top 40 index, because that's a fact. The thing will change, and other companies will drive it up again.
If Julia has taught us nothing, and Julia is our super saver. And if you don't know who Julia is, facebook.com/Bruce Business and search Julia, and you will learn about our magical investor Julia, who Warren introduced me to about 7 years ago. Is you've got to ignore the noise, and the moment you allow the noise to get in the way of habit and judgment and the direct debit, well, that's the moment you regret 4 or 5 years later, when suddenly you're not making the returns that you might have anticipated because you changed your mind, you panicked, you prevaricated, you sat on the fence, you stopped investing, you invested less than you had been, whatever it might be. You just got to ignore the noise, and that's hard, but it's often the best advice.
Yeah, and if we look at a year like last year, if we'd started the year and I'd said to you, by the end of 2017, the JSE is going to have delivered you a return of about 20%. You probably wouldn't have laughed at me, but most people would have, and some people would have had me committed to the insane asylum, but that's exactly what happened. So I think often, particularly South African investors, we're always looking for fantastic reasons not to invest and to be afraid, and often we've got good reasons for that, but at the same time, it's just amazing how the market continues to deliver returns. And yes, the mix of the market changes, etc., but those who stay invested, those who commit to their strategy, those are the ones that get rewarded. And and to me, that's the real secret in this whole thing, is often just to ignore the noise and stick to your plan.
And then a Steinoff happens, and you lose your confidence again.
Well, Steinoff happens, and you still, because Steinoff was a big part of the index, and absolutely disappeared out of the index now, but you still end up with a 20% return. So that's the point. Things can blow up.
That's called diversification, and that's why the market is a magical thing, and the index is a magical thing.
And I think to me, Dimension Data was the Steinoff of its time. And you look at all of that, and you still got your 15% a year.
There was no fraud and corruption at data. The share price reacted like the Steinoff share price.
Yeah, absolutely,
okay.
Absolutely. Yeah.
Just to clarify, please, Jeremy Ward, don't phone us and don't phone your lawyer. And his name is Warren Ingram, Ingram.
You can get me at Oric.
Nice. Warren Ingram from Galileo Capital. I'll give you the office address too, Jeremy, if you need it.